I'll get into that.
Yeah, I think before you get into that, one of the interesting things that I actually saw was that Investec launched its own trading platform.
Investec launched its own trading platform.
Yeah, I actually have.
Get into
I think we will. I think we will actually put like a screenshot of it.
Of Investec.
Of it. It's called Now Clarity by Investec.
Now Clarity by Investec.
Yeah, it's and I had a fiddle through it, and it obviously like works mostly like easy equities as well.
Yeah.
So what's easy is that if you bank with Investec, then you can easily transfer money easily between the two accounts with no things and all of that. So that's quite easy. And the user interface as well, much better than easy equities.
What?
Yes.
What's the
and called? Now Clarity.
Now Clarity.
Yeah.
Very interesting.
Yeah, so it's quite interesting. It's a very beautiful app inside there, and obviously you can invest globally and locally as well on pretty much everything.
Awesome.
Hello, everyone, and welcome to our 10th episode of the Investment Candle podcast.
10.
Look, I'm not rolling alone, and of course, I always roll with Nico.
What up?
So we were just having a very interesting conversation offline.
Yeah, we did.
About my Melody Sundowns winning the AFL.
Yeah.
Look, I'm very patriotic about Sundowns winning as a South African,
no, you're not.
right?
I'm
very supportive of Sundowns. And I'm never going to say sky's the limit, but I'm very supportive. I'm very supportive of it, right? Like, but before everything else, how are you doing, man?
I'm good.
Yeah.
Wonderful weekend of sports. Like you said you are very patriotic. I don't believe that at all. No, but it's just it's been good on the sports front.
Yeah,
man, what a year for South African sports.
Yeah,
we're winning. If it's not rugby, it's sheep shearing. We're apparently the best sheep shearers.
I was surprised too.
The Proteas are doing well. And Mamelodi Sundowns.
And the last time we recorded it was before South Africa went on semi-final on rugby.
Yeah.
And now we're champions, eh?
And now we're champions.
How does it feel?
Nah, it feels great, bro. It was good. Because I was there when the Proteas, the Springboks were doing their trophy tour.
Is it? Yeah, in Cape Town.
They drove past foreshore.
Yeah.
And seeing Elizabeth, Urban Elizabeth, he was there, and Siakolis, he was there. It was epic, man. It was absolutely epic.
I can imagine. Maybe let's get into the Sundance thing, man.
Let's get into it.
Look, the cup for me just didn't do it for me. It didn't create the excitement that I thought it would come. Look, it just. I guess. Look, it's the first one, right?
Yes.
For sure.
Yeah.
But yeah, I just didn't have I made an example with the World Cup, right? It was the first time it was coming to South Africa.
It's not a good example,
right? And we felt the atmosphere around it, minus the football of Spain playing beautiful tiki-taka.
Yeah,
but just the atmosphere around it. Wherever you walked in South Africa, you could actually feel it, right? Right now, of course, it's not going to be like that when it comes to the AFL, right?
No, it's not.
But just online, I couldn't feel that same sentiment.
Talking a lot of nonsense. No, mate. I disagree. I disagree with you, like hectically. Not only
bearing in mind you're a Sundowns fan.
Well, the thing is that we won, bro, and the stadium was full. You told me, it was a bit of a shocker for me that you said that the tickets were free.
Yeah,
but you saw a packed Loftus first.
I did,
and that thing was packed. And maybe it's depending on who you follow on social media. I follow local stuff, local football.
Yeah,
and I could feel the vibe. Obviously, it's not going to be at the same degree as the World Cup, because the World Cup is something that even gathers momentum as it goes. With a tournament like this, much like the CAF Champions League, you play home and away, and most of the time, whenever Sundowns plays away, it's really far away. It's North Africa. So to the point where it kind of gets lost a bit, right? Because now you're playing away, you're playing in a place that's not your own. Sometimes even broadcasting rights are an issue.
Yeah.
So some South Africans or some Sundowns supporters, they can't really watch. And I think that's some of the things. But as far as the spectacle is concerned, the storyline, here's my selling point of this game. My selling point is that in the final, they went away, played well, dominated the ball, and lost. Scored an away goal, but lost. And they had to score a goal here and win the game. And not only did they win the game, they won it by 2 goals.
2 margins. Yeah.
That is storytelling. That's why we love sports.
No, look, don't get me wrong. I'm very excited about
He's a Pirate supporter. You are a Pirate supporter.
I'm very excited about it, right? That Sundowns actually won this thing. But look, what do you think about the CAF model of actually having 2 leg finals? I mean, it's just so daunting.
Pros and cons. I think from obviously from a commercial point of view, I want CAF to be profitable. We've had instances where CAF has been running out of, they've been having liquidity, sometimes even solvency issues.
Yeah.
So I like the fact that now they're commercially viable, CAF. And I think the home and away, it does extend the tournament. So if you're going to have 1 game, compared to 2 games, you're going to make less money as CAF. So the home and away commercially is good because it solidifies the commercial space. It does take away, though, the momentum that you need in any World Cup, or not World Cup, any tournament. You need to get going. Like having 1 game last week and then having another one this week and then,
for the same thing. But I mean, I guess what you mean from a commercial perspective
makes sense.
Given that CAF actually generates very little money compared to like if it was a UEFA final, for example. 1 game is enough to generate enough income.
Yeah.
But okay, quickly, how was the game between Chelsea and Man City?
No, it was a ripper, hey?
It was a beauty, man.
No, it was hectic. It was really, really hectic. I watched it. I was in the office and I watched it and I was like, okay, surely. In fact, after Erling Haaland scored, I was like, okay, this is going to be business as usual. Chelsea kept on coming back.
Chelsea was just, I've never seen that intensity from Chelsea for the past, I don't know how many months.
Do you know who impressed me the most? It was Raheem Sterling.
That's the thing. I think I was talking to one of the Chelsea fans and then they said, you know, he had a point to prove and he really did prove the point.
I've never been a fan, but I was just like, whoa.
Wow, what a guy.
No, right? He was good. Cole Palmer was good.
Right?
I just think Chelsea, and also that chap that used to play for Crystal Palace, Conor Gallagher as well.
Yeah.
He's maturing into becoming a good player. So, great sporting weekend. I enjoyed it.
Yeah,
I enjoyed it. And then
on that note,
Pirates. One more. Pirates Chiefs. You guys got the result.
Yeah, I mean we won against Chiefs, but I mean look, the Soweto football is on its all-time low. Yeah. Right. For me to be impressed and be happy about it. You know, so that's why I'm not even like keen to even talk about it, because I just like yes, we get the pride to actually be the dominant team on that derby, but at the end of the day, the football is just poor, man. It's like poor. It's very poor, you know.
Wow, what an honest Pirate fan. No, but I hear you, bro. My dad used to take us to watch the Soweto derby in the old FNB Stadium. Man, oh man, it's not the same anymore. It's just not the same anymore.
On that note, portfolio check.
Portfolio check. We can talk sports in fact the whole day. But let's get going. The portfolio check.
Yeah.
So let's start off with the least, or rather I don't want to call it the worst performer, but it is what it is. So at the back end, we have Anglo Platinum. Anglo Platinum, surprisingly, as much as how it's still the worst performer, it's actually improving. Yeah. So if you actually had to rank them by the movements, which is something that I'll do, you find out that there's a bit of performance there. So Anglo, still on the negative side, negative 9.68%, minus 0.68%. And then we get to British and American Tobacco, BAT. I'm going to go back to one of the episodes that you went deeply into BAT. I think there's some insights there. Minus 6.34% is British and American Tobacco. No, in fact, even before that, I should have said Discovery, because Discovery is minus 9.48. In fact, Discovery is actually under.
Those are all my companies, mate.
Those are all the companies. It is. But I think out of our portfolio, the one that's really punching below its weight is Discovery.
Okay.
I think it's punching below its weight. And then it's British and American Tobacco. And then we get to Naspers. Naspers, it's okay. Green shoots. I'm sounding like Praveen Gordon, like green shoots. Minus 4.21%. With Naspers. And then we get to the greenies. Today, I added Sun International. Sun International is at positive 1.5%, which is awesome. Plus 1.5%. I'm going to get into Sun International.
Okay.
And then we have ShopRite, of which you're going to get into that. That's a topic of conversation today. Plus 12.2%. That's ShopRite. ShopRite is plus 12.2%. We'll have the portfolio here. And then number one, but not only just number one by quite a long way, is Capitec. Capitec is at plus 25.76%.
Wow. Bravo to you, mate.
Bro, Capitec is yeah, man. Yeah. Capitec is our leader today. It's fantastic. It's gaining momentum. I feel like the market is finally coming to grips with the change in model from just retail to retail only to retail and business banking. And I think as it continues, you'll see it take more shape, and I think the market is going to get in line. There's still more growth to be had with Capitec. How much more? I'm not quite sure, but I see runway still. But that's the portfolio check. Please let us know how your portfolios are doing. Who are some of your best performers? Who are your laggers? Yeah, but the biggest move has been, for me, it has been Sun International, and I'll get into that.
Yeah, I think before you get into that, one of the interesting things that I actually saw was that Investec launched its own trading platform.
Investec launched its own trading platform.
Yeah, I actually have. I think we will. I think we will actually put like a screenshot of it.
Of Investec.
Of it. It's called Now Clarity by Investec.
Now Clarity by Investec.
Yeah, it's and I had a fiddle through it, and it obviously like works mostly like easy equities as well.
Yeah.
So what's easy is that if you bank with Investec, then you can easily transfer money easily between the two accounts with no things and all of that. So that's quite easy. And the user interface as well, much better than easy equities.
What?
Yes.
What's the called?
Now Clarity.
Now Clarity.
Yeah.
Very interesting.
Yeah, so it's quite interesting. It's a very beautiful app inside there. And obviously you can invest globally and locally as well on pretty much everything, you know.
Awesome. Well done, Investec.
Yeah. They didn't pay me for that. I'm just putting it out there that, you know, it's becoming more and more easier to invest, because back in the day, pre-easy equities, for example, you needed to do it by a bank, or you needed to do you needed to pay hefty fees.
Yeah.
But right now, because now you're getting a little bit of a lot of these platforms where you can actually invest, then it means that the fees are going to go down, because competition kind of drives the fees down, right?
Yeah.
Because, I mean, if easy equity fees are like at 0.5% versus maybe Investec. I haven't checked the fees for Investec. I haven't actually put in money yet. But yeah, like it looked very, very interesting. I guess in the next one, I'll give you guys some feedback in terms of how the fees actually compare between the the Investec app and the Easy Equity app.
Equities. You know what, mate? I think it would be worth reaching out to Investec and saying, like, come engage with us over the new platform. These are the people that we have.
Yeah, for sure.
Yeah, okay, now clarity, hey?
Now clarity, yeah.
Fantastic. No, great piece of news, bro. Great piece of news.
But nonetheless, let's talk about your move to Sun International. I mean,
I wrote it down.
It's a property stock, and the move that I never could have anticipated that.
Yeah, so I hinted a little bit in our previous episodes that I like the travel and leisure space.
Is it because we're moving into the festive seasons?
That's one of the reasons, but it's not the only reason. So there's a couple that I wrote down.
Okay.
In my notebook here.
So now we're getting Enyico's diary today.
Yeah. No.
Dear diary. What does it?
No. It's not that. It's. I use this notebook for all my investment related reflections.
Okay, fair enough.
And I've been paying attention to the travel and leisure. But this is on a local space because internationally, I think travel and leisure at the moment is a no-go. Based on some of the geopolitical tensions in the Middle East. I think travel and leisure, it's not necessarily the way to go at the moment.
Okay.
But locally, so here's my bit of a case, and then please poke holes at it. If you can. So I looked at the industry and I looked at some of the numbers that came out of Stats SA.
Yeah.
And this year, from January to June this year, we've had about 4 million visitors coming
into South Africa.
Okay. Now seeing 4 million, it doesn't really say much. Legally, yes. So we have the number that they're here and then they leave again. So not only do they come here, but then they leave.
Okay.
So so January to June is about 4 million. Now that doesn't tell the whole story. But now if I'm going to paint you the picture of our visitors, so in 2022, remember this Jan to June, 6 months. In the whole of 2022 was 5.8 million. That's the entire 12 months. And already in this first half of the year, we had 4 million.
I'm just trying to check, like,
the
you
percentage.
said 4 million, hey?
4 million.
4 million, 60 odd people.
Yeah.
That's about almost 7% of our population influx.
Yes.
Wow.
It's nice. And then 2022, last year, it was 5.8 million. 2021, thick COVID, 3.8 million. So 2019, that was like pre-COVID. That was 15 million, of which out of that 15 million, 10 million were visitors that were coming from other African states. But for me,
15 million
in
2019. By then we were 56 million people.
Yeah, roughly pushing close to 60. But like our tourism sector it's an unsung hero.
Do you know the geographical
hotspots,
compositions as to where people go?
Or where people go. So it's the usual. Like if you go to Stats SA, even the Department of Tourism, the hotspots are usually it's Cape Town, it's Durban, it's the Kruger Park area.
Okay.
Yeah, it's the usual go-tos, and then also there's business traveling as well.
Yeah,
that's when you get to Johannesburg.
Okay.
That type of thing. So it's the main hubs.
Yeah.
But going back to my visitors. My visitors' line of thinking, it's basically people are tired of being cramped up. They want to go. And there's almost like revenge traveling. And that's where we see such marvelous numbers so far. And now we're heading to the Christmas season. That 4 million is going to be more than double, I think. So I think you're looking at close to 10 million. And once we get to 15, then we're well on our way. So that's just the visitors dynamic. And then there's also, we've seen pockets of investments in travel and leisure and tourism. There's a big investment that's going down in KZN by Club Med. It's basically this French company which raised financing here in South Africa. So there are South African banks that are confident enough to lend to people who are going to be investing in South African tourism. That's a fantastic shot of confidence over the industry prospects.
Indeed.
And then we've seen the Radisson Blue as well. They're also building a hotel in the Hoedspruit area. So we're seeing pockets of investment. And then the second last thing, before I get to who I went with, which is obviously Sun International, it was the visas from the Department of Home Affairs. That's always been an issue of contention as to unabridged birth certificates. I think that they are dealing with it, but the fact that it's a thing, it's a point of like we need to actually deal with it. That is a move in the right direction, in my view. Once you have a minister who doesn't see an issue, it's a problem. But now, if there's something to deal with, I think that's in the right direction. And the last but not least, I call this one local is lacquered. Last year, we saw tourism spending go past the 100 billion rand mark. And that was heavily on the back of local tourism. One of the most successful campaigns in South African tourism history, in my view, is the Short Left campaign. Absolutely brilliant. The people that worked on it, like we don't pay homage to government, sometimes rightfully so, but that was brilliant. And
did you see the Trevor Noah one?
Oh my word!
Absolutely beautiful.
Can we talk about that first of all? Okay, but like
the art. Okay,
it was brilliant. Oh my!
Go on with that.
Yes, I'll continue. So the local is lacquer. The tourism sector for me was saved by the local traveler. The local the South African who did a short left. You saved the tourism sector, especially when borders were locked. There was no international travel to be had. Yay! We still managed to go past the 100 billion rand mark, and that you can only build on. So, who are the potentials that could capture this growth? So, I think there's growth. There's a pathway. It's either Sun International, Southern Sun, Soho Sun, or City Lodge.
Yeah.
I chose Southern Sun. And no, it's not Southern Sun, Sun International. I'll show you where the share price is at the moment.
So you said City Lodge?
Yep.
It's just more like a budget travel.
Yeah.
And what else? Sun International, which has pretty much all the levels.
Yep.
What else?
Southern Sun.
Southern Sun.
Yes, Southern Sun.
So Southern International,
Sun International
and Southern Sun.
Yeah.
They're not the same thing.
They're not the same thing. Are they the same thing?
I thought they were the same thing.
No.
I've never analyzed the company.
No, I don't think they're the same thing. Because like when I checked, when I looked at the share price, they had different share prices.
Is it not like prefs and all of those things?
No, it wasn't. You'd find I can check again.
Okay.
No, but like okay.
No, we can check later and confirm.
We can check later. You guys, tell us if I'm wrong. But those are some of the companies that obviously, and then the Soho Sun as well.
Okay.
Yeah.
But are you not worried from a hotel space, right? Are you not worried about the lacks of Airbnb and all those things?
I'm definitely worried about that. That's definitely something to worry about. But I think as much as disruption is concerned, there's still space for some of these companies, of which I'll get to now. Not only are they travel and resort, but they also have the gaming aspect into it. So not only are they, to deal with Airbnb, would you rather stay at an Airbnb as opposed to going to Sun City, for example?
I mean, I guess it depends.
It's tough because the thing is that like what some of these facilities that, for example, Sun International has, not only are you getting a place to sleep, but you're getting a place to experience leisure in its entirety.
Okay.
So, for example, at the Maslow Hotel, not really gonna get too much there, but at a place like Sun City, a place like Table Bay, and a place like Wild Coast Sun, you can do more than just go sleep there. And if you look at their portfolio, it's very, very strong. So you got the Maslow, you got the Table Bay, you got Sun City, and you've got Wild Coast. But that's not only it. I think where the big generator of it all is the gaming side. I know they have Sunbet online, which is the online platform of gaming, and so roughly that business generates about 1.5 billion. But I like the portfolio mix of gaming and resorting, and that's Sun International. Yeah.
And then online gaming, you're not worried about that competition as well? Because
Absolutely.
like casinos and all those things are kind of part of this business models, right? So
Yeah.
there's been a lot of like online betting and all of those things. People can just do it at the comfort of their couch, right? And do all of those things. But I've seen a lot of this companies actually investing in those online gaming companies as well. So there's been a lot of, I think, I can't remember if it's Soho-san as well that made a acquisition of an online gaming company.
Yeah.
So,
but I think what I'm betting on here, it's not necessarily taking the types of businesses and looking them in isolation. It's an entire package.
Okay.
That you go to Sun City, you stay there, and you game there, rather than doing it in your own home. I think it's two different value propositions. Yeah. I think those, especially like if you're going to be traveling from the United States or Europe or Asia coming down here, you want the full package. You want to go on a safari. If you can get gaming, and then if you can stay at a nice place. And that's what, but I've seen the push of other disruptors such as Airbnb, where they're not just promoting sleeping, but it's experiences. And I think Sun International, I think Sun International is best placed to actually capture this growth that you're going to see, post-COVID growth. Yeah, so that's why I added in. Yeah, that's my Sun International play.
Makes sense. I know there's quite a bit to actually cover today.
There's a bit.
But okay, interesting movement. Like I never would have really anticipated this.
Really?
Yeah, but it's a little bit of a different look. I do travel sometimes, but I'm not an expert. I'm not an
you travel a lot.
I'm not an expert in travel and leisure, right? I mean, all I want is just to have a comfortable bed with breakfast and some amenities as well.
Yeah.
But yeah, no, quite interesting. But I guess moving on from a ShopRite perspective.
Yes, ShopRite. You'll definitely get into ShopRite.
Yes, from a ShopRite perspective, ShopRite came out with sales figures for the third quarter, but it's like the first quarter because they have a junior end. So for them, it's the first quarter from July until end of September.
Correct.
So they came out with sales numbers with their group sales going up, I think 13%. And one of the I think I can't remember, one of the division as well also increased the sales figures by 22% or so.
Yeah.
And they reported that I think I remember mentioning this on one of the episode that they actually record retailers actually talk about increasing their market share. And then you keep thinking, if everyone is increasing their market share, then who's losing market share, right? But ShopRite came out to say that they've increased market share by 125 basis points. But which makes sense, right? There's a lot of issues that are happening at Pick n Pay. So obviously you would see probably them losing some of the market share based off of the fact that they don't have a lot of product offering as they try to figure out their corporate challenges that they're facing and trying to focus the group in terms of going back to the basics, etc. So you in the short term, there's a bit of a dislocation in the market, which ShopRite, I'm sure even Woolies and Spar, they're gonna come out to say they've gained market share. So because of that dislocation of Pick n Pay, right?
Yeah.
So we should see that in the short term, and it will be.
Do you know the image that I'm having in my mind is of a wounded animal in the Kruger Park somewhere, and there are a bunch of hyenas and vultures just circling around in the air,
just waiting for that opportunity,
just waiting to take a pound of flesh and saying that, listen, I have my market share.
Yeah, I mean that's quite unfortunate. I mean, we would lack that competition because when you have a lot of competition from retailers, it also benefits us in terms of the pricing, right? No one is just gonna price rice at 100 rand per kilograms, unless it's some Japanese rice of some sort. Right? So it's issues like that, right? So yeah, I mean the share price of Shoprite was it kind of had an uptick off of this news. So
By how much?
I can't remember, but there was a little bit of uptick because from my own personal portfolio, there was a little bit of gain on the share price when the results were released, when they released the sales figures, which shows that as and when Shoprite releases, there's always gonna be that uptick because their numbers are always so good.
They're always
always so good.
They're
But yeah,
always good.
Anyway, I think this episode, what we're trying to do is to kind of talk about what's happening in the market, right?
Yeah.
Some of the companies, because we haven't touched on some of these companies for a very long time.
Yeah.
So yeah, I think the next one maybe you want to touch on, mate, is Richmond.
Yeah.
Like what's happening with Richmond? We've seen that there was a couple of sales down on all those things.
Yes,
So
there was. So with Richmond, they also released their numbers, but I wouldn't just say that they've underperformed, because if you look at the industry across the board, even LVMH, they also released, and it's quite similar. It's been difficult in the industry. The first quarter, in fact, the first half of this year has been fantastic across the board for luxury. Okay, just to give you some context for those who are tuning in, maybe for the first time. So Richmond is a luxury brands group. They own companies that sell items, luxury items, such as leather goods, jewelry, watches, such as your Cartier or Panerai, that sort of thing. And just given by the names, you can tell that it's mostly European. They're based in Switzerland.
Yeah.
Yes. So the functional currencies francs and euros. So, but like, so what has happened is, I think the results are a reflection of what has happened in the industry. There's nothing to write home about that is Richmond specific. You saw it happen with LVMH. And what we're basically looking at, we're looking at a squeeze in demand. Looking at a squeeze in demand, and it's not necessarily from the growth areas such as the Asia Pacific and some other emerging.
When I looked at the results, the Asia Pacific numbers were better.
Yeah, they were better.
Obviously boosted by the opening of the Chinese market, right?
Yes.
And maybe sorry for cutting you a little bit, but from the Americans is the one where
I was going to get to that. I was going to get to that. So in fact, the issue is the Americas, North America, Canada, and the United States, as well as Europe. That's where the issues are, and that's where the squeeze of demand has come from. So just to paint a picture a little bit, what we saw in COVID and after COVID, you saw many people that were having, surprisingly, they had excess disposable income. They were not paying rents. They're not paying rents. They were moving out of cities. Some people were going back into their parents' place. And as a result, they bought lots and lots of luxury goods. They're not buying big items such as a car, and they were buying watches, and then so you saw an uptick, in fact, a sharp uptick, and then that was further augmented by the opening up of China, and then now you get to a situation where you have stagnation because of the demand has actually like stagnated. And that's what you see. I can't really say anything too much operationally because it hasn't been that. It's specifically the Americas and Europe. That's the the chairman, Mr. Johan Rupert of Richmond. He mentioned that geopolitical tensions. I'm not quite sure if I see geopolitical tensions being a reason as to the slowdown of the luxury goods market. Yeah, but I guess that's just my view. But that's the rough and tumble of Richmond.
Okay, very interesting. I mean, you would think as a luxury good brand, you would think it's a little bit inelastic, right? But I mean, it is what it is. Nonetheless, I think there was a question from one of our Instagram pages, right?
What's her name?
Was it Zama?
Zama.
So Zama asked, she's like, okay, so when a share price is falling, right? But then the company is still declaring dividends, etc. Do you actually hold and wait for the share price to go up, or do you actually buy some more to get more dividends relatively in the future when they declare more dividends?
Great question.
Or you like what is the call of action in that instance?
Great question. Fantastic, Zama. Thank you so much. She is an investor and she's been following our content from day one. So thank you so much. Please be like Zama. Engage with us. No, it's fantastic, bro. I've had instances of both where I engaged in a dividend play, and obviously after the dividend, the share price went down, and in fact it was 2 weeks afterwards the share price actually recovered, and I made a clean getaway. And then I've also had a dividend play of which the share price did not recover. Even until this day, it hasn't recovered. And the dividend was actually declared and paid about 1.5 years ago. I think it was last year or a year and a half. It was last year. It was Omnia. That share price hasn't recovered since. So I think, and this is going to depend on by investor, and I'm also going to ask you the same question. It depends what you're in there for and how long you're going to be in there for. Because time is of the essence, because time of value of money, you need to decide on what you're there for. And if you are there for the share, then you can actually ride it out. But if you just wanted an in and out job, then I don't think it's actually worth it. Because if you look at the decrease, if you look at the decrease of the share price after the dividends has been paid out.
And by the way, the specific company she mentioned was Remgro.
I can actually get into that. I can actually even get into that.
Yeah.
So it's normally what you would see is that the difference between the share price pre-dividend, the share price after dividends, roughly, if the calculation is correct, roughly it's about the same. So in essence, you didn't really lose that much. What you gained is cash flow, and at the cost of growth. If it's a good company, fundamentally, it will go back to where it was. So I think to answer the question, I think it depends on what you were there for, and depends on how much time you have. What would your response be?
No, I think my response would be that, like you said, it depends on the company. The first thing you do is to look at what is causing the share price to fall.
Yeah.
Right? Is it something fundamental? Like, for instance, if you're looking at a Remgro, right? And Remgro is a investment holding company, right? If they sold one of their companies, right, ideally, right, the stock should fall with the same NAV or the market value of the underlying company they sold, right? But we know there's always a discount between NAV and market value.
Sure.
But ideally, that's just one example, right? So you would expect the fall either way, right? Or on the share price. So if it's something fundamental like that, you'd be like, okay, it's just the fall due to this. But if, for example, it's a division within, say, Pick n Pay comes out to say they're shutting down their clothing business, right?
Jeez.
So obviously that should be counted for in the share price, right? And the share price is going to decrease.
Very dramatic example, yeah.
So if the share price decreases in that instance, you have to think to yourself, you obviously lost money, a little bit of money. Do I think it's ever going to come back up?
Yeah.
Right? And it could even fall more.
Like Omnia.
It could even fall more. So it depends on the facts around the falling of the stock. Sometimes it's just they've had the director left abruptly.
Yeah.
The share price could actually decrease off of those news, right? Or there was a strike in one of the factory. The share price can decrease off of that.
Yeah.
But these are what I call market noise, short-term market noise, or short-term turbulences in the market, right? That are easily correctable, in my opinion, right? So the share price, likelihood of a share price recovering from those news are actually high, as opposed to a fundamental issue where, you know, or in other example, it could be that there's just, I don't know, there's just news around the industry on what's going on in the industry, right? It's not company specific per se, but it's just what's happening in the industry. So when you look at, first thing first is look at what's causing the share price to decrease. Are this issue actually correctable? Or are this issue actually, I don't know, right?
No, I get it.
And then you can either hold based off of that, or you can buy some more. For instance, if you see that, you know, it's just a director, right? They're going to find another better guy, right? To actually run the company better even. So I would actually even buy more.
Me too.
You know,
Me too.
Because that is an opportunity that you don't often get in the market, right? So yeah, it's things like that I would really do.
Zoning it on Remgrow in particular. We've seen with Remgrow over the past year, 2 years, there's been a lot of corporate actions.
Yeah.
There's been a lot of sell-offs of some of their companies and a lot of delisting and a lot of mergers with other businesses. I think with Remgrow, one thing that you'll get as a shareholder is that you're always going to get action. And that is absolutely fantastic for a holding company, for you to get action. I remember I met shareholders who have held Remgrow shares even while it was still called Rembrandt. And then, given the nature of holding companies, is that when they sell these companies, they get permission from you as a shareholder and you get compensated for it. So as you go, you might find out that you start off with one company, but because of these corporate actions, you might find out that your portfolio actually expands based on these corporate actions. I think that is a strategy that one can actually use for investment holding companies, and in particular Remgrow. So one more example, even with Remgrow using this strategy. Outsurance. Just by holding Remgrow, you would have had Outsurance in your portfolio.
Yeah.
That's fantastic. You know, Greenrun Shipping and Greenrun Bank. All of these companies, your portfolio, you would have seen it just expand with this. So what you do lose in a market share, in a share price perspective, you get maybe in an expansion of your portfolio with other companies as well. Something just to take consideration. And with Remgrow, again, sure, you might have lost out on the growth of Mediclinic, right? But then they actually increased their shareholding. They just delisted it. So that would have played into your share price. Zama, if you're still holding Remgrow, for me, I would continue.
You'd continue, hey? I mean, it's not like Mediclinic, for example, was performing poorly. It
was magnificent. No, not even just poorly. I remember Tsako, my little brother, had had Mediclinic. Man, that thing was an outperformer. Because if you compare it with its contemporaries, you're comparing it with Netcare.
Yeah.
You're comparing it with Life. That share price of Life and Netcare hasn't seen 20 Rand. 20 Rand is too much. Mediclinic was at 90.
Yeah.
Just putting it out there.
Look.
Just saying. I'm just saying. Yeah.
No, I'm with you there. I'm with you there. Mate, there's a lot to chat about, but I don't. Yeah. I think we can touch maybe a little bit on that. Because we were meant to talk about Vodacom, for example.
Yeah.
We were meant to talk about TFG sales as well and earnings.
Yeah.
There's been a lot that has been going in the market. Yeah. Maybe quickly on Vodacom.
Yes.
They came out with the numbers. I think their sales price were in the double digit.
Revenue
growth, sorry. It was in the double digit. But what Vodacom South Africa did was to buy Vodafone Egypt.
Yes, I saw that.
I think it's about a year ago or something. So the first time they actually report the results with Vodacom Egypt included. So their numbers are just distorted.
Yeah, I know, it's diluted.
It's just distorted because it's just like, okay, you buying a company that has a sales value figure of 100, you have say 300 or 400. So when you add that, the growth is just like 45%, 30%. It's not really reflective of the performance in itself.
It's true.
But yeah, I mean, what we've seen is that their profitability has decreased a little bit, but I think the market sentiment is they believe that they're going to turn things around and it's going to be more profitable than it was. So quite an interesting thing. I don't know much about the Egyptian market.
I'm also not quite sure.
I'm not well clued up in what happens in Egypt, but very interesting move, to be honest.
I remember ShopRite had its foray in Egypt and they struggled.
Yeah, I don't know how things work in an Arab country, for example.
Different laws.
Different laws, different ways of doing things.
Yeah.
But yeah, I think, mate, there's quite a lot that we can chat about when it comes to the market and what's happening in the market. I don't know what else you actually had in mind.
I'm just trying to think of some of the interesting things that also happened. I didn't really look into it, but I saw World also released a 12-month trading statement. I think it was a trading statement. I still like World. I really do. Especially now. I think they've had lots of existential stuff which they had to deal with. The biggest one was definitely the Russian invasion in the Ukraine, since they both have operations in the Ukraine as well as Russia. But I think they've managed to navigate that pretty well. As far as the actual business model has to offer, with the automobile business as well as the Caterpillar, the cat business, it's just looking a little bit, because like you depended on hectic economic activities, particularly in the heavy construction and mining industry. And that has been beleaguered by the issues at Transnet. So
oh yes, Transnet was one of the things we mentioned on the prep. So
yeah, we did, but like let's not get into it. I'm tired.
Where is the jar that we said we're gonna have?
But we're doing so well.
We should actually ask Matthew to put the jar in here, hey?
No. And we were doing so well.
But I mean, look, it's warranted. Maybe, sorry to cut you, but it's warranted in this context, right? That we actually talk about it because Transnet has 130 billion debt on its balance sheet, right? And on top of that, they're going to be downgraded, which means that even if they're refinancing that debt, it won't be in better terms because they are not rated as high, right? Which means that the interest rate that they're going to be charged is going to be higher, right? And of course, guess who's going to pay for that debt?
It's the taxpayer.
Exactly.
So with okay, we're talking about it. It's fine. I'm in. So I attended the investment call after the midterm budget statement, and there was nothing said about Transnet in throughout that whole speech. And some person from some banker from Citi came and asked a question. Oh, sorry. Oh, bring it with me. Cool. Oh, it's going away from me. Action. Yeah. So some banker from Citi asked, "What's the issue with Transnet?" And the guys there at the National Treasury said that they received an application for a government guarantee. Now that's hectic because operationally, that's where the challenges were coming. But if you're asking for a government guarantee, now you are looking at financial management issues now. There are issues either with your balance sheet from a solvency point of view. There are issues with your P&L from a liquidity point of view. That is an issue now.
Yeah, I mean, look, we've been financing all those those things as taxpayers, right? Look,
I am so frustrated.
Because one of the things is the minister had said that they're not going to pay for Transnet's debt, right? But I know for a fact that it's just a tactic, man. At the end of the day, they're going to bail out Transnet. It's not like they're just going to let it be simmered or taken over by private debt financiers and all of that. That's not going to happen. They will end up refinancing that debt or financing it just as much as they actually financing the debt of municipalities to Eskom. So pretty much the same thing. Look, the debt to GDP in South Africa is rising high. As much as, I don't know, and it's still very much an issue because I think in order just to finance or meet the budget gap, I think we need to borrow, is it 200 billion? Per year.
Yeah. No, it's more. It's close to 3. So how I normally do it is that I always take the figure and then I divide it by 365. And then obviously you see how much do we have to borrow a day. And I saw that it was close to almost R1 billion a day. So I was like, okay, it's reaching close to the 300.
So you can imagine how much money, and the government is going to borrow to finance the debt.
Of course. That's usually the case. I think what my big frustration was, I was always under the impression, and bear in mind, I was under that impression because whenever the Transnet board comes to finance and gives an account, there was never any issue about your balance sheet and your PL. In fact, you keep on saying that we're profitable. You get a clean audit from the Auditor General. Like, financial management is good. We're having issues when it comes to the operational side. Fine. But now, if we're going to be like now needing bailouts, well, what are you saying? Okay, I want some truth. Like, fine, medicine, the tough medicine sucks. But like, warn us first. Don't just like shove it in our like. Look, man, come on. We're already struggling with the. Okay, now I'm ranting. I'm done. I'm done, bro. I'm done.
And that's how we're going to wrap up this episode.
I'm so done with these guys.
That's how we're going to wrap up this episode, man.
Bro.
Episode 10, thank you very much, investors, for the support. I think we've dropped some key market updates that have been happening.
That was good.
And of course, there's always like a government something that is happening.
Bro, episode 11, let's not mention Yo, but like we did mention Pick and Pay a little bit. Just touched on it, but like we didn't go ham on it. No?
Yeah, we didn't go ham on it.
Yeah. Now it's just still flipping Transnet. Yeah.
Okay. Yeah. Cool. From Nico and I, thank you very much. Cheers.
Oh my gosh, dog.